Okay, students, I'm going to take some information from the textbook and I'm going to show you the difference between the direct write-off method and the allowance method in a certain situation here. The first thing we have is that we received $800 from a customer. So let's record that $800, a debit to cash of $800, and a credit to accounts receivable. Incidentally, the balance in the account is $3,200. Now that's going to be the same over here, a debit to cash for $800 and a credit to accounts receivable. Under both methods, okay? It's the same when we receive the cash. But now we're going to write off the rest of it. The balance is $2,400, so over here we're going to debit bad debt expense. And credit accounts receivable. We actually could have made this together as one journal entry, but you can see what's going on a little bit better if we make two. And then under the allowance method, we're going to be debiting the allowance for doubtful accounts to write off the $2,400, and I'm going to abbreviate there, save a little bit of room. The credit, of course, goes to accounts receivable for $2,400. Okay? The difference, of course, being we're debiting bad debt expense here, we're debiting allowance for doubtful accounts there when we actually write it off. All right, we reinstated the account and received $2,400 in full payment. So in order to receive the payment, we have to have the account on the books. We're going to reinstate the account, accounts receivable, and we're going to debit accounts receivable for $2,400, and we're going to credit the account we used to write it off. In the case of direct write-off, it was bad debt expense. So we're going to credit bad debt expense. And then we're going to record the receipt of cash to actually pay it off. Okay, so the cash is $2,400. We're going to debit cash and credit accounts receivable. Okay, on the other side, we're going to reinstate the account. So it'll be a debit to accounts receivable for $2,400 and a credit to the account that we used to charge it off. In the case of the allowance method, we used the allowance for doubtful accounts. So that's the account that we're going to credit. And then we record the cash received. And we're going to debit cash and credit accounts receivable. Now you might ask, you're going to end up with a zero balance anyway in accounts receivable. Why even put it back on the books? Well, you won't have a record of it. You won't have a record of the customer actually paying. So you do want to get it back on. If we put this in a T account, see if I have enough room here to do it. We started out with $3,200. We paid $800, or the customer paid $800. We wrote off $2,400. We reinstated $2,400, and then the customer paid the $2,400. So we ended up with a zero balance. But it is important that you put it in the account receivable. You put it also in the subsidiary ledger so that you will have a record of your customer paid. Okay, in the next video I'm going to go over a few more exercises.